Well, good morning, everyone. At least good morning to those here in London. And I'm delighted to be opening another FS Club webinar. Today, it's on the post-COVID-19 business model and policy choices for digital finance in Europe. And I'm delighted to have here two guests today. Joe Zammit-Lucia, who's the co-founder and board member of RADIX, a think tank, and Ismail Ertürk, who's a senior fellow and senior lecturer in banking at the Alliance Manchester Business School. So you've got their biographies online, and I won't read them out. I'm not trying to be insulting, but we want to get into the meat of the matter. You'll all know me. I'm Michael Mainelli. I'm one of the directors at Yen, and it really is a definite privilege to be able to introduce many of these webinars in our FS Club series. And the reason we're able to do so is that our sponsors, listed here, are extremely generous and tolerant and allow us to range widely and freely across technology, economics, and finance. And today, it couldn't be a more interesting and topical subject than what should we be doing about the future of digital finance across Europe. There is a substantial publication and piece of work by RADIX, which is up in the webinar area. So please do consult that. But we're here to discuss that and hear from our two experts about what they've been doing, what they're suggesting, and we'll have a fairly good amount of time for Q&A. So just a few things I might point out. One, the slides will be posted if they're not posted already on the site. The recording will be up in approximately 48 hours if you want to view it again or hand it on to others. And finally, please do use the GoToWebinar question facility to feed questions in that I will introduce into the conversation during Q&A. I say that because I'm here with you, so I won't be receiving texts or emails or WhatsApps or Signal messages from you until it's too late. So please do use that question facility. And all the questions with your email attached will be sent to Joe and Ismail so that they can get back to you. So if you want to contact them directly, just pop it into the question bar and they will receive all of that. So enough of the administration. One of the things that we wanted to cover today was just to give an idea to Joe and Ismail what the audience feels like. So we've got two polls here, and I'm going to launch the first one right now. I know the FS Club folks tend to be very fast off the buzzers here. And what we're asking really is, what do you think is likely to be the main outcome of digitizing the financial system? So pick the one you feel is most likely rather than the most desirable. Is it A, improved efficiency within financial services providers? B, lower transaction costs for customers? C, banks and others focusing on locking customers into their digital ecosystem, the sort of walled garden, as it's called? Or D, a wholesale transformation of the financial system to deliver substantial social benefit. Over half the audience have voted, so just quickly, if you could put your votes in there. That's great. We're up to 3/4 of the audience having given their opinion. I will close the poll in just a moment. Okay, and now closing the poll and displaying the results. So Joe and Ismail, we've got 46% on improved efficiency and 36% on banks and others focusing on locking customers in. So an interesting result there. And we have a second poll, which I'm just going to launch in a moment. And the second poll is very much about how we're going to be organizing ourselves. So how can Europe best organize to compete effectively with the USA and China? Here we have three response areas. A, develop digital finance capability within EU structures. B, develop the capabilities collaboratively between selected EU member states and non-EU members, obviously Britain and Switzerland. Or C, let everybody go their own way. Okay, we're now up to over half the audience having voted on that one. I'll leave it open just a few more seconds. And I'm now just about to close that one with 80% of the audience having voted, and I'll share those results. This one is an overwhelmingly clear preference for B, which is develop capabilities collaboratively, including the wider range of the UK and Switzerland. So with that, if I may, I'd like to hand over to our panelists. And Ismail, I believe you're kicking off, so the floor is very much
Yeah.
yours.
Thank you, Michael, and good morning to everyone who are based in the UK or Europe, and good afternoon or even evening if you are based elsewhere. Next slide, please, Michael. What Joe and I will cover today in our presentation is listed on this slide. So we are going to look at 6 issues. We will first evaluate the immediate post-COVID scene for FinTech, and then we're going to look at what realistic promises FinTech can make after COVID-19. As you can see, it's pretty much about post-COVID FinTech scene. And then we're going to turn to Europe and then see how Europe is placed globally in the FinTech sector. And we'll talk about taxonomies, which we believe are important going forward. So a need to move away from a general FinTech label. We'll discuss that in greater detail in our presentation. And also we'll argue that a public policy is important, especially for patient capital for the FinTech sector. And then we'll look at how Europe can become competitive, especially in relation to US and China. Next slide, please. Let's look at the post-COVID scene in FinTech. Although the COVID-19 crisis has created a benign economic environment for digital companies in general, not all FinTech companies benefited from this. There were winners and then losers. And most winners were operating in digital payments and digital services to other financial institutions. And also there were some lucky ones, those FinTech companies who raised finance just before COVID-19. They were in a good place. They could expand, especially in lending, and they were not under pressure to raise new funds after COVID-19. And there were also those, especially in the US and UK, who adopted quickly to benefit from the central bank and the government financial supported schemes, which underline how managerial skills as well as technological skills are important in FinTech. Now, the challenges obviously appeared soon after the COVID-19 crisis. Investors were seeking for safety, and that made it difficult for some FinTech companies to raise fresh capital. And also things like default risk rather than growing the loan portfolio, especially in the lending FinTech sector has become more important. And the financial skills are considered to be key in many ways than just the technological skills. And the management skills of entrepreneurs who are good at technology, but managing human resources, building up a lobbying a skill has also become important in FinTech. Next slide, please. On this slide, you see 2 graphics. On the left-hand side, it shows how a FinTech index in the US underperformed after COVID compared to S&P 500 and then Nasdaq Composite. And on the right-hand side, you see how in the first half of 2020 and until August 2020, both in the number of transactions and funds raised, FinTech sector has done worse compared to 2019. Next slide, please. This also shows the harder questions that the FinTech sector has experience in valuations. On the left-hand side, you see pre-COVID valuations, price-earnings ratios. And Allende obviously has done, it was one of the winners after the COVID crisis. But the Wirecard, the Wirecard scandal has raised serious questions about the sustainability of the business models of some fintech companies. And also on the right-hand side, the amount of investment that went into fintech companies, which was one of the major indicators before COVID, how fintech was doing well and the growth rate in funding. But when we compare the amount of investment that went into fintech with the total fines paid by global banks, as you can see, the incumbents have a big financial might. They could pay a much greater amount of fines than the total amount of investment went into fintech, which we believe is going to be important going forward. And that's why thinking about a patient capital fund for fintech industries will be important going forward. Next slide, please. And on the right-hand side of this slide, you will see a study by Finch Capital, which gives a taxonomy of fintech companies. And we believe the disruptive character of fintech and its future success as digital innovation will depend on a focus on individual fintech firms' function in financial services rather than a general label of fintech. The label of fintech seems no longer suitable, and the financial service a fintech company offers is likely to matter more in the post-COVID era. And we believe that this is a right move for the fintech industry and financial industry as a whole. Next slide, please. And as we can see here, when we focus on Europe, except London, Europe doesn't really rank very highly in the fintech industry. Next slide, please. This gives another picture of Europe compared to the rest of the world. So both charts on this slide show Europe, excluding UK, again, are well behind the US and China in innovative fintech companies and in investments. Eurozone, especially as a currency union and a banking union, fails to become a capital market union for fintech. Whereas China and the US, with their centralized capital markets, they can support big fintech companies that can be truly competitive against the incumbent banks. And now I'll pass over to Joe.
Thank you. Thank you, Ismail. I want to go through the idea that what happens with fintech and digital finance, I guess, is a better term, eventually will run through public policy. So while we have a lot of innovation, the shape of digital finance and what it will achieve will largely, in our view, be determined by the public policy framework that is set for fintech. And when this whole fintech idea and digitizing finance came up, there were a lot of promises. You know, I've listed here 4 things that people expected from digital finance: that it would be disruptive, more democratized finance, that it would increase competition, and that it would align finance with societal goals. From the results of the poll that we had earlier, very few of you seem to believe that digital finance will live up to these promises. So the question is, if this is what we want from digital finance, then what is the public policy framework that we need to establish in order to get there, rather than just let fintech essentially make the current system be what it is, but become a little bit more efficient. Next slide. So in policy terms, digital finance covers several areas, overlapping areas of policy: financial regulation, industrial policy, competition policy, all within the framework of social policy, by which we mean what do we want to get from digital finance as a society. Next slide. I'll start with competition policy. And of course, there are many players in digital finance. There's the incumbent institutions, there's big tech that's getting into this, and then there's the whole startup ecosystem. And the question is whether competition policy today is fit for purpose. Next slide. Because if it isn't, what we will find is, of course, that the startup new player ecosystem will just get swallowed up in two ways. First of all, by focusing itself on actually supporting the incumbent institutions through technology. And secondly, so rather than disrupting them, it makes them stronger. And secondly, of course, there have been lots of acquisitions which in the tech sector, for instance, have been problematic and unable to be prevented by current competition policy framework. Finally, of course, today's challenger is tomorrow's incumbent, as we have seen with the Facebooks and Googles of this world. So it's questionable whether our current framework of competition policy is fit for purpose in the 21st century in a digital world. Next slide, please. The second question is financial regulation. And here it's a very, very difficult balance, because financial regulators obviously want to encourage innovation, but they also are naturally risk averse and want to contain want to manage financial stability. So how to balance that is a big challenge from the regulators, because if we regulate innovation in the same way as we regulated the financial system in the past, then we'll get the same financial system all over again. But for financial regulators, it's a challenge, because it's a little bit like trying to change the engine on an aeroplane while it's still flying. So it's not an easy thing to do. But the question that we raise in our report is, what's the vision of financial regulators for the future of the financial system rather than the current, and how can we transition from place A to place B? Next slide, please. And the big question that we ask is, what is it all for? Why do we want to digitize finance? Is it just that we're going to be doing exactly the same things as we've done before, but now we do them on our iPhone instead of on a bit of paper? Or is there really an opportunity to change what finance delivers and create more social value, which that finance delivers? So in our report, we've put up a very, very preliminary, that you can see here, a very preliminary way of evaluating the social value of digital finance initiatives. And we've split that into how individual companies are governed, and the second, what is the potential of adding social value depending on the different levels of service, the different types of services provided. I won't go through this here in detail, just to say that this is our kind of off-the-cuff first bash at trying to understand how digitizing finance can deliver social value. But it's something that we'd like to take on in the next phase of our work. And if anybody among the audience has ideas as to how we might approach this, they would be most welcome. Next slide. The third question is the industrial policy. Should there be an industrial policy for digital finance? We know that the European Commission has released a paper on how they see digital finance. But our view on an industrial policy is that it should contain these four elements. One is, as I said before, what's the purpose? What's all this for? How are we going to get finances? How can Europe play to its strengths? And how do we put together what we call a coalition of the willing and able? So in order to achieve that, we've suggested a few things that could be considered. Next slide. The first is about playing to strengths, and where, thanks to the work of Michael and his team, where Europe does have strengths is in green financing. So Europe obviously already has the capability and the mindset to try and get added social value out of its financial system. So that should be a good substrate on which to build a useful digital finance system, because a lot of centers in Europe already have that mindset. Next slide. So one of the things we're suggesting, which can bring together some of these four elements here that we describe as a requisite for industrial policy for finance, is a multilateral investment fund. Next slide, please. That would contain both public and private investment. There are plenty of models on how this can be done. We don't need to reinvent the wheel. Next slide. And that would include, it would be multilateral and would invite to participate what we call a coalition of the willing and able. So don't do it within EU structures, do it in parallel with EU structures, involve the countries, the ex-EU countries that are strong in this area, particularly the UK and Switzerland, and invite to join any country in Europe that has an interest in digital finance, because not all countries do, that has the capabilities in terms of financial know-how, things like existing sandboxes that work, etc., etc. So rather than this being something top-down pushed by the Commission, it's an opportunity. If you want to join, you can join. Let's have a coalition of the willing and able. And I'm delighted to see that in the poll, most people believe that this is also the way to go. Next slide. So how would this work? The objective would be to provide long-term patient capital for startup and scale-up. You know, one of the curses we have in the UK and in Europe is a lot of innovation, a lot of startups, and they all get swallowed up. The second is that such a fund would be able to focus on funding those FinTech initiatives, digital finance initiatives that focus on adding social value. It would encourage disruption and competition. As I mentioned, it would include countries that have both a policy interest and the capabilities to participate. And it would set its investment rules in line with its mandate to provide long-term capital and focus on added social value. In other words, a fund like this could set rules which will essentially, if it's big enough, drive where digital finance will go without having to have those rules go through the painful political process of having them enshrined in legislation in multiple different countries. And obviously it would be run as an independent investment fund with public oversight. Next slide, please. So, oops. So anyway, I think that what we tried to achieve is we put on the right here these four little ticks. I think that using such a multilateral investment fund would tick most of the boxes to develop of what we think should be the framework for developing an industrial policy for digital finance. And if anybody in the audience is interested in engaging with us as to how we could get interest to kickstart such a fund, we'd be delighted to hear. Thank you. Next slide.
Well, thank you, Ismail, and thank you, Joe. No trouble here. The audience is definitely interested, so I'll get cracking if I might. Bob McDowell kicks off with a good question. What do you both think the role would be of central banks in such a multilateral investment fund?
Shall I take this one and then leave it to Joe? I mean, obviously, we have seen recently how central banks are taking central bank digital currencies seriously. But I think central banks should be concerned about regulation and then monetary policy rather than investing in a fund. But they need to be part of the ecosystem, especially on the payments. And on the regulation side. But I don't know what Joe thinks. But I don't think they'll be mandated to support the fund. But an oversight role would be useful.
I agree with that. I think it's very important to maintain a very clear separation between those public functions that are focused on regulation and public money being used as investment. What we don't want is for regulators to feel they have to start behaving like investors instead of regulators.
Edwina Morton has a good question. You ended at the end talking about avoiding sort of the political difficulties, but she says in a fund unmoored to existing multilateral political structures, who would decide on the social values to be fostered?
Well, I think that's a very good question. Shall I take that, Ismail, to start?
Well, I think we need to get the consumers involved because ultimately they benefit. I think we have seen very little about how consumers get the social benefit. So the stakeholders need to include a system of representing consumers and NGOs as well. I mean, there was a very interesting statistics in the US where one of the feds, I can't remember which one it was, they've done a survey of SMEs receiving finance from peer-to-peer lending, fintechs, and then community banks. So fintech companies can lend quicker. But when it comes to service satisfaction, community banks do better. So I think we need to get a consumer perspective on that.
Now,
I think, can I respond to that also? I think a fund such as this would have a very clear mandate on to focus on added social value, and that mandate obviously would have to be agreed on what it means with its investors, which would include governments as well as private investors. So that mandate would have to be agreed. So it wouldn't set the mandate in isolation. When I say run as an independent investment fund, what we don't want is to start getting political, overly political considerations in where the investment is going to go. What we don't want is France saying, well, actually, you should invest more in my country, and the UK saying, no, you should invest more in mine. So I think the investment side, as to where the money goes and how, should probably be as independent as practical in the real world from political considerations. But obviously, what added social value means is a highly political question that would have to be discussed with the shareholders.
Hans Kolk would just like to be absolutely clear that your reference is to Europe as opposed to the EU, i.e. Europe as Switzerland and the UK included, and other areas as well. And also goes on that would also be interested in some further reflections on the UK and the EU post-Brexit. If you had any quick thoughts you'd like to share on the incumbent, the startup, or big tech.
I think there are common issues when it comes to big tech versus fintech, which is Europe-wide, including UK and the Eurozone and the rest. For example, open banking, which is equally applicable in the UK and in Europe has been very important. I think there needs to be a similar open big tech issue where the data that are available to big tech should be available to both FinTech and banks, incumbent banks. So in that sense, there's a common issue. But post-Brexit, I believe London will be in a better position because there isn't a Eurozone or European Union-wide a policy or vision. We still see this, what we've seen in banking. There's this nationalism at the country level, which will make it, I think, difficult. And that's why we think it is very important for the EU to come up with a policy.
Alfio Puglisi asks, how can you get consumers involved if they often do not really understand the underpinning of products and services offered to them? So to what extent does digital literacy fit in your framework? And I might tack on to that a comment from Hugh Purser concerning the question and purpose of FinTech. Are there immediate lessons to be learned from what customers are actually doing, where they are putting their money and how transactions are being handled, especially by the younger generation?
Let me have a go at that, shall I? I think getting consumers involved is always a challenge because most people don't want to get, don't have the time or inclination to get involved in a lot of these detailed issues. And, they, to an extent, they can only react to the services that are offered. But I think we have seen some change there. I mean, maybe the most dramatic one has been what's been happening in the US with Robinhood and Reddit and all that sort of stuff. So there is movement. These are things that we've never seen before. We've also seen consumers being offered the opportunity, for instance, to invest specifically in green initiatives and stuff like that. So I think all these can involve consumers, and I don't like to call them consumers, let's just call them customers, or even citizens. There is the opportunity to involve customers in investment choices, in what they want their money put to, in all sorts of other ways, if one is minded to do so. But it's not very useful or adds much social, cutting 1 cent off transaction costs is not going to change the world. So the question is, what is on offer and how do you encourage digital finance initiatives to offer to consumers these opportunities? Because unless they're offered, then they won't be available.
Got some interesting comments here as well about, as you'd expect from an FS Club audience, about crypto and other digital assets. So Philip Leone makes a few points. He says digital assets seem lost in a fiat world and with difficulties about their intrinsic value. And funnily enough, of course, we were chatting about that in the warm-up. He wonders as well, will central banks and fractional reserve banks be able to maintain their control over money? And he believes that the core issue may well be, what will money look like in 5 years? Public money, private money, real assets, and its regulations. That's sort of one bit. And related to that, Trevor Hilder points out that DeFi, decentralized finance, in the Ethereum ecosystem appears to have reinvented all existing financial instruments in about a year. Do you think this will have an impact on the current financial system?
All right, shall I have a go at it, Joe?
Yep.
One of the things that we learned in economics since the 1980s, when we had these liberalization of financial markets, a huge sort of interest, anything that's financial. So narratives seem to be as important as the reality. So I see this interest in crypto more narratively driven. with economic fundamentals. And we need to be careful. I think we need to look at what economic benefit we get from these currencies in productive economy, in trade. And especially at a time when we have a huge disconnection between capital markets and the real economy, it is especially important. There's added social responsibility how these cryptocurrencies are evolving. I mean, when it comes to economics, there's a very simple rule. It is the size. Although the cryptocurrencies has a market valuation of 800 billion, we have one company that is worth, if you look at Amazon or $1 trillion. So ultimately, central banks have the huge power in monetary matters. So I think they are watching and looking at how it is happening, and also the financial instability, financial risk elements are very important. So I think they will play a role, but I don't see them to replace the existing status quo, because sovereign and central banks are huge and big, and they can take on. And then technologically, they've been advancing themselves with the central bank digital currencies. So I don't see them as some people see being real sort of competitors to the central banking and the financial and the monetary system.
Well, Philip goes on to point out that this whole digital finance is about decentralization and removal of monopolies, so playing very much to your first points about competition, which I hasten to add. In fact, I wrote quite a lengthy pamphlet in 2009 about lack of competition being a proximate cause of the financial crisis. We've got a lot of people here very interested in the formation of social purpose, and I'll read a few out, and perhaps you can respond. Somewhat like Edwina, Hugh Purser is curious, what's the most powerful force? Government, institutions, the public? We have Donna Buckland pointing out, regarding the focus on social values, which social values are ripe to tackle first for tangible impact within the financial ecosystem in the UK and Europe? And in fact, Gordon Mays opened as well with a question related to that. How can FinTech address the problem of the shrinking of local community banking, where relationships, local knowledge, and needs is important?
Joe, you take this.
Okay. I think what constitutes social value is obviously a contested question, and will remain a contested question. And there are various aspects of social value. So the question is, there are two questions. One is, what social value should we be looking for? And second is, what added social value is it actually possible to deliver? Because, this is not some kind of magic. But I think that debate, what we say in our report is that debate has not yet been had enough. And we'd like to encourage it. We'd like to, have this discussion. What social value are we looking for from digitizing finance? What is actually possible? Issues, and it's contested. Everybody has to participate in that debate. There's nobody who holds the key. So we're interested in stimulating that discussion and seeing what the realities are. The challenge I think we have for the digital finance industry is that because of the way it's financed at the moment, which is through the mainstream financial services industry, it risks being captured by the same type of financialized mentality that has bedeviled us for a long time. So unless we get a different type of patient, socially focused financing of this whole sector in place, then all we're going to do is just crank the wheel and reproduce exactly what we've had before, because it's produced in the same mindset. Obviously, things like community banking, which has been raised, is a complicated issue, because digitize, again, one of the points that we make in our report is that the fin aspect of FinTech is possibly more important than the tech aspect. And if you're trying to set up a community financing, a community banking system, it's not just about the technology. It's about, the fundamentals of how you finance that and what sort of organizations are able to deliver that. So all that is up for discussion, I think. Digitization won't solve it as if by magic, but I think we feel in our report that we need a much, much broader, deeper conversation on what is the social value that we're looking for and that can be delivered.
Intriguingly, I think Vladimir Dimitrov is laying down an interesting challenge. If the proposed fund is for the public interest, why not let the public vote with their wallets, both contributing to investments and deciding where the money goes, learning from Robin Hood type episodes. So that's an interesting point there. But I'll move on, if I may, in the time available, to pick up on, you struck a chord with two people. Michael Cooper says, you seem to envisage legislative and regulatory independence. At the same time, we can envisage or hope for regulatory interventions on big tech, for example, what's going on in Australia. What risk is there then that this might be impeded by emerging legislation and regulation if they are decoupled? And Gabby Glasner-Cipollini wonders, will this dispute between Facebook and Australia impact heavily the scene, and what may be the consequences for a multilateral investment fund? So interesting that you triggered that Australia-Facebook dispute.
Ismail, do you want to take that?
Yeah, and I'm sure you have something to say on that one, Joe, as well. I think big tech has a different sort of trajectory and development. But we have seen in the history of capitalism, railways, and so on, the utilities. I think for me, the key issue is to what extent companies like Facebook, Google, become utilities. Then it becomes a political and public service issue. I see these recent regulatory interest in big tech, especially Facebook and Google, social media, more of what kind of utilities, infrastructures we need in a digital world. And nobody has a question, but there's one complication. I think the capital markets tend to come in the way of finding solutions with, for me, overvaluation of some of these companies. But clearly, we'll learn as we go along. Let's hope without much cost and problems.
Yeah, I mean, if I can add to that, the question is, will we learn? So, we know now that, we were all asleep at the wheel to an extent as the big tech revolution happened. We let them buy up everything. It's now monopolistic or oligopolistic. And we're now in a very difficult position in terms of how to unwind something that is already established. And there are no easy answers to big tech. No easy answers at all. I think that the Australian episode will focus minds, but what the solutions will be, I think, is still up for grabs. The question is whether we're going to let the same happen in the digital finance world. Are we still asleep at the wheel, or are we about to, or have we learned enough that we won't let the same thing happen? About the separation that was raised between the regulatory side and the investment side, I believe it's vitally important. And if we want an example of why it's vitally important, we only have to look at Wirecard. I mean, there the regulators were obviously captured by the interests of what they saw as a national champion. And it's ended in disaster. It's very important for the regulatory function to remain separate and independent from any kind of commercial function. Otherwise, we're all in trouble.
Well, unfortunately, we've come to the end of time, and I'm getting a number of comments and compliments here. You've clearly engaged the audience and got them thinking. I would say there's a teensy bit of skepticism, but that's justifiable. And I'll just read out two bits here where Ian Harris is sort of curious. Is there not a disparity between FinTech's promise of innovation and the EU's seemingly natural tendency to regulate financial services heavily? And Bob McDowell almost wonders the opposite way. Will digital finance in Europe be a formidable barrier for any EU members considering a Brexit of their own? So very interesting both ways. But you've laid down, I think, a very intriguing challenge, and one that would be really great to see in this post-Brexit era, which is that Europe is Europe, and the EU is one of the institutions, an important one, but it's not absolutely essential to everything. So thank you so much for your session today. If you can hold on just a moment, I have three quick rounds of thanks. Firstly, as ever, to our sponsors. Surely in technology, economics, and finance, Joe and Ismail have brought it all together in this session today. Secondly, to you, the audience, you've been very vibrant. A reminder, I will be passing on all of the questions. I haven't had time for all of them on to Joe and Ismail, and they can get back to you if they wish. We do clearly have a lot coming ahead. Next week is a busy week, but as ever, just go and visit the website. That's the best way to see what's forthcoming. But a lot of fun events are definitely planned. Finally, if I might, I'll just turn to you two, Ismail and Joe. It's not an easy subject to raise, and you've done an extremely good job in getting it across. I do hope it encourages a number of our listeners and viewers to go and read the report itself, which has a lot more detail. And I know you've had to cut quite a bit out to get it across today in the brief time we've had available. I'm unable, even in a FinTech and high-tech world, to open the floodgates for applause, but I have brought along a little Korean karmic clapper, which I will use to give you applause. And we wish you the very best. And I hope as you open that you'd like to get people engaged, a coalition of the willing, as you termed it. I hope some of today's listeners join that coalition with you. So thank you very much.
Okay. Thank you, Michael.
Thanks very much. Bye-bye.
Bye-bye.